Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, we are firmly into the second quarter, a month left essentially of the second quarter. There's a lot of work being done not only on the budget bill, which in my personal opinion does not have enough cuts. So I think that will be worked on now that it's in the Senate. So we'll see what happens ultimately. But generally speaking, the economy is on track. When we started at the beginning of the year, I talked a lot about volatility the first 6 months, soothing out maybe the second half of the year. I think we're going to be on track for that. A lot of talks on tariffs. There's some deals supposedly in the works to be done soon and signed off on. Remember, this is not done overnight. It does take some time. We have a lot of countries that get in line and get fair trade. But ultimately, that will help the U.S. economy grow more. And over time, you'll bring some, not all, but some things back to the U.S. for manufacturing and our general supply chain. These are all net positives for the growth of the U.S. economy and for the stability of the U.S. economy ultimately. So if I look at the next 3 to 5 years, again, as I've always discussed with clients, we're not concerned about the next 3 months. We're going to have volatility, folks. Could we pull down another 10 or 15% before we shoot back up? There's a good possibility. So I was spot on about the volatility. We had about a 18% pullback in the equity market literally 6 weeks ago, only to rebound again. These things are normal. But as the economy transitions over the next 3 to 5 years, I firmly believe we will have better GDP growth well in the 3% plus range, and it could be 3.5 to 4. We're going to see how really the overall government handles future growth and bringing things back to the supply chains in the U.S. But we could have much higher GDP growth than 2%, which is statistically average. This will lend its way, obviously, to balance in our budget more. But one of the things that I discussed early is the budget that was passed by the House literally a week ago is not enough cuts. We are well overspending. Even with the current budget, it basically takes out about 2% of our spending over 10 years. So that means we're still going to have a $2 trillion budget deficit with this current budget. We need to bring this down substantially in order for maybe the next 3 to 5 years to get to a balanced budget. Maybe that'll start happening in the Senate, and hopefully it does. The amount of debt the U.S. has is manageable, but we are at a point where you need to address this. It can't go on for another decade or two because at some point, like the rest of the world, it will ultimately cause more inflation and really slow down the U.S. economy from a debt burden perspective. We're positioned correctly, in our opinion, with our client portfolios. We've made a few adjustments recent, and we have more obviously on the way. We will make adjustments to portfolios not for emotional reasons, not because of volatility, but because there's better opportunities for our funds, for our clients. You always come first as a client, and as always, if you have questions about your portfolio, if you have any concerns, please call me at the office. If you need to schedule a phone review, give the office a call. And remember, our business grows from great clients like you. Chances are your friends are not being treated the way you're being treated with your money management. We appreciate your business always, and we appreciate your referrals. Keep us in mind when you talk to your family and friends. And by the way, make sure when you get any of our update videos or so on, you're more than welcome to forward those on to friends and family so they can get the same high quality education that you get on a consistent basis. Have a safe and profitable day.